Hello, my name is Scott Dahl. Thank you once again for tuning in to another one of my podcasts. Let's talk about the market this time around. We're 7 days away from an election. I'm recording this on October 29th, 2024. What's going to happen to the market through this election? Now, I'm not here to predict the future, but what I'm going to do is I'm going to show you what I see and what I think the odds of probabilities are for this election and going through this election, and then possibly even into 2025. So let's take a look at things. So the first thing I want to look at is I want to look at trend. As a technical analyst, trend is the absolute most important thing. Price going higher is the most important thing if you want to buy stocks and make money. So let's look at the New York Stock Exchange. It's a broad index. It's a good indicator of what is happening with the price of the stock market. And you can see that the New York Stock Exchange is going higher. This is a daily chart. This is November right down here. I've drawn a trend line. It's up and to the right. This trend is very strong and we're continuing to go higher. And this is a primary sign that we're in a continued bull market. Let's look at the breadth of the New York Stock Exchange. If you've watched my previous podcast, you know that the breadth is very important to me and to virtually all technical analysts, because what it does is it shows the internal strength of the price trend. So we looked at the previous chart. The New York Stock Exchange is going higher. This is the breadth of the New York Stock Exchange. This is the stocks in the New York Stock Exchange that are participating in this up move. As this goes higher, you can see that more and more stocks are going higher. So we're broadening out. In other words, there are more stocks other than just the top 7 to 10 names that are continuing to push this market higher. It's broadening out in strength, and that's a good sign for a continuation of this bull market. So this chart again is breadth. It's not price, it's breadth. This is the amount of stocks that's going higher. This is also a daily chart. You can see the trend line is up and to the right. So we have continued strength in this bull market. There's something else I can say about this bull market is that we're about halfway through what the median bull market gives us. What I mean by that is the median bull market lasts 46 months. We're about 26 months into this bull market, so it could conceivably, time-wise, last for another 2 years. I'm not predicting that it will. I'm just saying these are odds of probability looking at past performance and past history. Also, if you look at it from a return, we're up in this bull market about 67% from where it started. The median bull market averages about 110%. So we could say potentially, no guarantee, but potentially we're about halfway through this bull move. Remember, once a trend gets going, it has a tendency to continue, and oftentimes it'll continue further than what a lot of people think. Now, I'm not saying we won't have some sell-offs and some corrections. That's to be expected. In fact, next year is typically one of the more volatile years in the 4-year presidential cycle. So I expect more volatility going forward, and particularly in the fact that this year has been so void of volatility. So you can expect it down the road. However, this trend should more than likely continue for a longer period of time. So we've got an election coming up in 7 days. Typically, what happens is the market bottoms right about in this time period, and then it takes off, and it continues through the election. Regardless of who gets into office, the market has a tendency to rally through the election and even into the following year. So that would be the probabilities of what we would expect going forward. The median return from the election day to the end of the year on the S&P 500 is 1.78%. Now, if you look at this chart I've got up, this is a chart that was shared to me from Scott Brown. He's a fellow CMT. He's a very good technical analyst, but you can see that this is the path of the election year for the S&P 500 average. Right down here, this is week 43. This is typically the bottom. We're at week 43 right here. So is this a bottom of the trend? Is this a bottom of the market for the remaining portion of the year? I don't know. Nobody does. However, there's a probability that this is the low and that we'll continue to move higher up and through this election. Does the market care if a Democrat or a Republican gets into office? In the past, it has not. Who knows what's going to happen from this election? It's too tight. But if there's gridlock in Congress, then theoretically and probably the president won't get a lot done. And the market loves gridlock because it eliminates a lot of the uncertainty. So if we have gridlock, then that's a positive. However, if you go back through history, the market really doesn't care who gets into office. And it's exemplified by the chart you have here. We have data all the way back to 1960. And for the most part, whether it were Democrat or or Republican, the market makes new highs. The only exception I can see here is the Bush presidency when we had the Great Recession. And you can see that we did make new highs, but it sold off at the end of his presidency and the start of Obama's presidency. So it really doesn't matter to the market from an historical perspective who gets in. I'd like to say something else about seasonality. So we're entering into a strong period of the year from a seasonal perspective. If you look at statistics, if you go back and you look at the market, we have a seasonally weak period and we have a seasonally strong period. You've all heard the old adage, sell in May and go away. Well, if you sell in May, the returns are seasonally weak from May to the 1st of October. And those periods, those seasonally weak periods of time, they usually give you negative returns. If they give you a positive return, it's typically very, very small. The seasonally weak period this year is from May 1st to October 1st was up 12.6%. That's with the S&P 500. When you have a seasonally weak period that's up strongly like this one has been, then that bodes well for the seasonally strong period, we've entered into as of October 1st. So not only are we coming into an election, which is typically a broad positive, we're also in a seasonally strong period, followed by a seasonally weak period that was up good. So that's another positive. Let's look at one more thing. Let's look at sentiment. Sentiment is what the individual investors or what sections of investors are thinking about this market, whether they're bullish or bearish. Now, the interesting thing about the sentiment numbers from the average investor, if you're looking at that specific subset, the more bullish the average investor is, then that's more concerning because the average investor has a tendency to be on the wrong side of the market. It's just a fact because, as I've mentioned in previous podcasts, a lot of the decisions are emotion-driven as opposed to fact-based driven or technically driven, and the emotions can put you on the wrong side of the fence. So let's just say it's safe to say that you can go against, or you can go opposite of what the average investor is thinking. So if this one sentiment indicator that I'm going to introduce right now is from the American Association of Individual Investors, AAII is the acronym, what they do is they poll a group of investors weekly, and they come up with what percent is bullish, what percent is neutral, what percent is bearish. So if you take a look at what I've got up on the screen, you can see that at the start of October, 45.5% of investors that were polled were bullish. Now, 37.7% of the people that they surveyed are bullish. Where does that hit? Well, that's right in line with historical averages, 37.5%. So this could exemplify that the market isn't overheated. Also, if you look at other numbers, we're not overbought. We're not oversold. We're kind of right in that sweet spot. So what's going to happen through the election? Nobody knows. Something could happen that could create volatility for the markets. We could have a geopolitical event. It looks like things are heating up in certain areas of the world. That could create this volatility. But from everything I see right here, from what I've just given you, it looks like to me that the path of least resistance is higher. No guarantees, but that's what I'm seeing. So call me if you have any questions. 949-497-6366. Scott at DahlCapitalAdvisors.com is my email. Dahl Capital Advisors obviously is my website. I'd be happy to look at your portfolio. You want to make sure that you are positioned properly because if we do move higher, you want to maximize these gains. I'd be happy to help. Just give me a call. Thank you again, and I'll look forward to another one of these in the near future.